My name is Amir Ashraf bin Ahmad Nazri and my matrix number is 15D8024F 1097. Okay, so for question 1, which is cash received on sale of investment. The cash flow activity is investing. This transaction involves the sale of non-current asset, which is an investment the company had previously made, like in shares, bond or property. Investing activities relate to the acquisition of disposal of long-term assets and other investments not included in cash equivalents. For example, companies sold government bonds worth 100,000 ringgit. Since it's a long-term investment, the cash inflow is recorded as investing activity. Okay, next is question 2, which is cash received from disposal of plant and machinery. The cash flow activity is investing. Plant and machinery are considered fixed asset, and when sold, the cash inflow is part of investing activities. For example, a company sold an old machine for 80,000 ringgit. This sale is not part of the company's main operation, not regular income, hence it falls under investing. Next up is question 3, which is repayment of long-term borrowing by cash. The cash flow activity is financing. This involves paying back long-term debt, such as bank loans or debentures, which is part of how business finances its operations. Financing activities include transactions that affect equity and long-term liabilities. For example, paying 200,000 ringgit to settle a 5-year bank loan, classified as financing outflow.
Assalamualaikum, my name is Wazir Kabir Sulaiman and my matrix number is 15D8024F1075. So for the first part of statement of cash flow as shown on my left is operating activities. So this section shows cash movement from the company's daily operation. So basically how the company earns and spend money in normal business activities. So we start with profit before tax, then we will adjust for non-cash item like depreciation and loss or gain on disposal of assets. After that, we adjust for changes in current assets and current liabilities. So operating will include only current assets and current liabilities. So when current assets such as inventory or trade receivable increase, we put them in brackets because we need to subtract them because they represent cash outflow. So the company will use the money to buy more stock or give customers more time to pay. But if current liabilities such as trade payable increase, we add them because the company delays buying suppliers, so cash remains in the company. For example, as shown in the statement of cash flow, increase in inventory 5,000 ringgit, the company spend money to buy more stock, so cash outflow, so we need to put bracket on the item. So next example is increase in trade payable 2,000 ringgit. The company has not paid its supplier yet, so it means that cash inflow, so we need to add the item. Other example is for paying electricity and water bills. This reduces cash. It means that cash outflow, so we need to put bracket. And last but not least, the example I will give is receiving payment from customers. This will increase cash, so cash inflow, and we need to add the item. So let's move to the next section.
For the second part, investing activities, this section record transaction involving non-current asset such as vehicle, equipment and building. When the companies buy a new asset, we put them in bracket because that is cash outflow. When the company sell all assets, that is cash inflow, money coming in. So for the example, purchase of motor vehicle 142,000, company use cash to buy a new vehicle, cash outflow bracket. Sale of plant and machinery 30,000, company receive cash from selling all asset, cash inflow, add. Example outside, buying new computers for the office, that is also investment, cash outflow, bracket. Example outside 2, selling an unused company car, bring in extra money, cash inflow, add. So for the explanation about investing activities, bracket means cash leaving the company for investment, while non-bracket item mean cash coming in from asset sales.
Hi, my name is Haifai Sabshabi Syed Mustafa. My matrix number 15-80-24F10X7. Okay, so for the last part, I'm going to explain about financing activities. This section shows cash movement related to the company's capital and long-term use. When a company pays dividend, redeems debenture or pays interest, this cash outflow shown in brackets, but when the company issues new shares or gets a new loan, that cash inflow because money comes into the business. Okay, so the example, the first one, dividend paid RM5,000 ringgit, bracket. Money goes out to shareholder, so cash outflow, bracket. Issuance of ordinary share RM73,000, money comes in from new shareholder, so cash inflow, add. The third one, example outside, taking a bank loan. Company receive cash, so cash inflow, add. The last one, example outside, repaying part of the bank loan, money goes out, cash outflow, bracket. So for the explanation, bracket means cash going out for payment like dividend or loans, while non-bracket items mean cash coming in like share issues or loan received. In conclusion, the company recorded a net decrease in cash of RM12,000 ringgit. This shows that during the year, it used more cash than it received, mainly from buying a new vehicle or machinery. At the beginning of the year, there are 12,000 ringgit cash at bank. By the end, the balance became zero, so the statement clearly shows how the company's cash was used throughout the year.